came out with a little wall here, and I was looking at a couple of maps. I had to, our people had to stitch a couple of them together, right? Is the producers, the Gulf producers, they've had this threat from Iran. We're going to close the Strait of Hormuz. I don't know how many times over the last decades, right? These guys aren't stupid, right? They know what's at risk. Their oil is at risk in the revenues, right? So what they've done over the years is they've built alternative supply routes. And I think, where are we here? Okay, so the Saudis have done that, the UAE as well. And it doesn't, I'm not sure if it would totally be able to pick up the slack if the Strait of Hormuz were closed, but at least there are alternatives now to get that oil out.
There are some alternatives, but it wouldn't be able to pick up the slack in a closure, not in the near term. If you're talking about sort of the extreme case of a full closure for any period, you're still losing, if we include, obviously including some products and some other liquids, you'd still be looking at the best part of 20% of global supply. And so you can't really get around that with the physical infrastructure as it stands, which is why we had that initial move. And why I think I heard the speaker earlier say they talked about getting to above 120 in a scenario where it closed. We think actually it could be even higher than that. You could even trade close to 200. Not just in any way sustainable, not for any duration of time, but if you're talking about that true shock impact, where could you go? If you just think about the sensitivity of price to that scale of supply loss, you'd still be talking about very, very high numbers, because the amount of flexibility in the infrastructure isn't there in the short term to work around it quickly. You know,
this ceasefire, as fragile and as shaky as it is, seems to be holding. So I guess that's positive, and that's good news. But a lot of people don't think this whole Iran story on the nuclear front is over at all, right? And this could come back to bite us. We don't know. With the Strait of Hormuz, right, they've never actually done it. Do they have to actually do it to affect traffic and flows? Because, I mean, closing it, I would assume, I think you would probably agree, would mean the risk of them mining the strait, correct? They don't actually need to do that. In the Red Sea, all it took was several boats with Houthis in it, and that did the trick. I mean, that is still an option to Iran, is it not?
I suppose it depends what you're saying exactly by closure. You know, are they trying to do something that is short-term disruptive, or are they really playing that card of saying we're really trying to lock this down for an extended period? If you run a scenario like you talk about with the similarities to what's happened in the Red Sea, what the response would be principally from the US is the major question, because obviously at that point they could, given the facility or the assets they have in the region,
they could,
well, not just strikes on Iran, but also they could deliberately go in and open that waterway. I mean, they've got two counter-strike groups relatively close, so that would be an option to them. And I think to your point also about ceasefire holding, if you look at the amount of risk premium we've got in the price, I think you could argue at this point we've probably got slightly insufficient risk premium. But it's a difficult market dynamic if you're thinking about, well, what's fair price at the moment? Because in a scenario where we don't end up with any disruption, we still think oil prices in, say, 6 months' time would be materially lower than they are now because of the degree of physical oversupply, and also the fact that demand growth this year is looking pretty weak. Whereas, of course, if you do actually get any meaningful disruption, it's a binary outcome, and you're talking about much higher prices. So it's very hard to see what's your fair value risk premium. But at the moment, if you're just talking about that specifically, I would argue that the market has probably a little bit too little risk premium, because, as you say, the ceasefire is holding. Will we get through here without any bumps in the road? That's very questionable.